So hello guys, welcome back to another session of charting analysis, and in this session we are going to discuss what trades I took yesterday. Yesterday was actually Thursday, today is Friday. Thursday in the New York session I took some trades, and in that session I took two trades. One is a sell trade, another is a buy trade. My daily bias was bullish on XAUUSD in gold, okay, and but I wanted, before it goes higher, I wanted to take some sell side low, okay, and then I wanted to go higher, okay. So first I took one sell trade. You guys can see the execution. So these two sell trades are there, okay, and then one buy trade, like two buy trades, point 10 microlots and 5 microlots buy, and I exited here. My target was much more higher, but the reason I exited this particular point is because I passed my account. I passed my phase one account at that point. That is the reason I exited before my target. But yes, obviously it took my target. It's not a problem, but that is it. Now let's go on to the execution. You guys can see in the first thing, okay, I gained 95, then I gained 45. I could have gained 90 here itself also, but I'll tell you why I was not able to gain it. Okay, so let me just tell you. So let's go on a discussion. Let's go on a daily time frame, right? And let's hide everything. So you have this particular chart in front of you. You can see that XAUSD market is rallying really high. Okay, it's doing good. I wanted to go higher. My daily bias was bullish. Why? Because it has now touched this particular daily bias. Okay, you guys can see this daily order lock, this down close candle. The market came into that candle and it touched that point and it reacted violently from then, and it started to go higher. Okay, so if we go on a 1 hour time frame, right? So now let's focus on 1 hour time frame. Let me get my drawings back. Okay, so these are my drawings on 1 hour. Yes, I am on 1 hour. Okay, now see, this was where the point touched the daily order block. You guys can see it touched the daily order block. Then it showed some rejection from 1 hour order block, and then it went on higher. I took some trade in here as well, okay, which is explained in the previous video of $180 profit in XAUSD just before this video which I uploaded. Okay, then what the market did is, see, today this is Thursday, right? So Thursday you can see this yellow and green color, okay. So yellow color is the London session and green color is the New York session, okay. So what happens? So let's go on and try to get what is actually about to happen. So now you can see one thing. Okay, my cursor, my cursor is getting attached with my iPad. Okay, now we can see this is Wednesday. Okay, this is Thursday. Now what you can see is, yes, there is some rejection. There's some rejection. The market went higher. Okay, and there is some rejection shown. Okay, now the market is in London session. So if I zoom it out, I was expecting, you can see there's a rejection from the change in structure of delivery. But according to 1 hour time frame, this is the change in structure of delivery, right? You guys can see, and there is a 1 hour order block. You guys can see the 1 hour order block, and this is the change in structure of delivery. This particular line is the change in structure of delivery according to 1 hour time frame. Okay, the market rejected from this CISD, this change in structure of delivery. Okay, the market has been rejecting from this change in structure of delivery. Okay, and even when it came back, it didn't touch that point. Okay, in the London session when it came back, it didn't touch that point. Okay, what I was expecting is, okay, at least it will, at this point of time it should come down, right? That is what I was expecting for the market to do. Okay, and it should come down. It started to came down, but it didn't give me any entries in the London session. Why? Let me tell you why. So if I go on, I should zoom this 1 minute time frame. Okay, I should zoom this chart to 1 minute time frame. Let's go on 1 minute time frame. Now we are on 1 minute time. Let's try to understand why I wanted the market to go lower than this. First of all, first thing is, this is the change in structure delivery line, and the market didn't touch this point. So it is obviously going to come down. Okay, so before the London session, I was waiting for the market to show me some kind of movement which can help the price to go lower. Okay, so yes, this is some, you can see there is an order log which is formed. Okay, there's a fair value gap created. If I go on 3 minute time, you can clearly see that. So there's a fair value gap that has been created, and that fair value gap got inverted, and then there is a candle high which came into that order block, and then there's a sell entry. But why I didn't take this sell entry? Obviously you can see I didn't take my sell entry there. Okay, this is the, okay, I didn't take my sell entry there. These two executions are in the London session. So I was about to take a sell trade, but yes, I was not in London session, so I didn't take any kind of trade. And in this London session, there was the market was too choppy, so I like, okay, let's wait for it. So when I went on the New York session, okay, so before the London session it didn't touch that point. Can you see that? This change in structural delivery is not touched. It means the market will again come back to that point, but it is going higher. So market started to go higher, and in the New York session, I saw the market that it broke this point. Okay, it created a fair value gap when it broke it, and it touched this inverted fair value gap. This inverted fair value gap, it touched the point, and then it started going lower. Okay, now what I did is, as soon as this particular inverted fair value gap, this fair value gap, so this is where I found my entry. Now focus clearly. I took my entry at this point. Why? Because there is an inverted fair value gap. So now this fair value gap is now inverted, and I took my entry exactly at this point. So yes, I think yeah, short position at this point. My stop loss was at this high, and I was expecting at least this low, the body of this low, to be taken out, right? Somewhere at this low, okay, some high, right, like this. Okay, that is what I was expecting. Now what I did is, if I go on 1 minute time frame with the same chart, so if I see on same chart, one entry I took aggressively. Why? Because it the fair value gap got inverted. So one entry I took here, and the second entry market started to go lower, and then it again came back high. Then I thought, okay, let's take one more entry because it's showing me some good rejection from this particular close candle, which is acting as an order block. So I took one entry, and then again when it came back, I again took one entry. These two entries are, I think, amount of, okay, 0.1. It means both are 10 micro lots. Okay, both of them are 10 micro lots. Yes. Okay. Huh. Then both of them were 10 micro lots. Okay, now the market started to rally lower and lower and lower. Okay, I was like, okay, now the market is going higher, higher. There is one thing you need to notice. This particular red candle, you can see, oh sorry, red line. What is this red line? This red line, let me just increase the, okay, this red line, you can see this red line, there was some news about which was about to come, and the market was, rallying good, and at this point of time, you guys can see this red line. You guys can see this is a red line. Okay, the market is rallying high. I'm like, okay, if the market is rallying higher, it means what? There is some news about to come, and the market will manipulate. If we see there is some high which has been created, can you see these equal highs? Before the market started to rally downwards, these equal highs have been created. So obviously people will trail their stop loss to that point, right? If the people are going to trail their stop loss at that point, at the news timing, the market will surely take that out. So I was okay. I was really okay that, okay, when the news is about to come, the market will rally higher, and it didn't give me any goosebumps or emotions. Okay, but there is one problem. You can see that it didn't take out this high. These two highs was not taken out by the high of this candle, of the news candle. Okay, it went back higher, then it went back lower to take out my targets. But there is one thing. Can you see? I took my one target, but the second target is here. Why? It is because of the reason I thought, if the market is going to go higher and then go lower with the news, it is going to go with an impact, right? I thought I can gain some extra points because I was about to, pass my account, and so psychology is fucked up. Okay, so I was about to pass my account, and so I thought, okay, let's set the target for the first order. For the one order, I set the target fixed order, and for the second target, second order with this particular 0.1 micro lot, I removed the target. I removed this particular, what do you call it? I removed the target. Okay, so I was like, okay, if it goes down, I can gain some extra pips. Okay, but then I saw it created an up close candle. Okay, and it created up close candle, and there is a fair value gap that has been created. I was thinking, now, because there's a fair value gap that has been created, the low has been touched, which I wanted it to touch. But you can see there's a 1 hour order block, 1 hour change in structure delivery, that is not touched. 15-minute change in structure of delivery is touched, but this particular change in structure delivery is not touched, which is of 1 hour, which needs to be touched. So that's why I wanted the market to go lower. But yes, and it came, and out of emotions, I was like, okay, let the market come at this point, because if it wants to go higher, it will obviously come go higher from this point. So I took my sell entry from there. Can you see that? I took my sell out at that, and then because I thought the market was about to go higher, then I took one buy entry. Can you see? There's one buy entry, but yeah, this market broke this low, and it again went lower. Now I have more confirmation that the market wants to go higher. My stop loss for one of the buy entries was set, so minus of $37 loss was there. Okay, so like, okay, now I've got the stop loss. Now the market is in the change in structure of delivery at 1 hour time frame. I was waiting for the market to give me some kind of confirmation. Okay, we are 1 minute time frame. Can you see some kind of entry? No, you can't, because I was watching 15-second time frame. So if I somehow, I can't show you 15-second time frame over here. If I convert it, it will not show me executions. Okay, but if I had some candle by seconds. If I show you navigator, okay, so this particular thing, this particular market, I from the experts tab, from the market tab, I installed this candle by second, so you can actually watch a second's candle. Got it? So I was watching 15 seconds, 45 second, 30-second candles. Okay, and in the 15-second candle time frame, there is some fair value gap. Can you see? Even in this 1 minute time frame, you can see a fair value gap. This is fair value gap that has been created. Okay, But in 15-second time, the market structure shift was very much clear. Okay, but it's not clear in this 1 minute time frame. But I was like, okay, I took an entry. I think yes, I took the entry over here somewhere. Okay, and by yeah. So this market rallied higher, changing structured level. The market again came back low. I took the entry at this point, somewhere at this point, and I set my stop loss at this low. Can you see? This is the inverted fair value gap. Got it? Okay. So this is the body of the candle, and obviously I do not want the body of this candle to be pierced. So I was expecting, okay, we can expect this to be as a candle, because I don't want the body to be inverted. So I took my entry and I was like, okay, let's set the target. Where is my nearest target? Okay, so my nearest target is this point, the high of this point. Why I was not expecting a target beyond that point? Because there is an inverted fair value gap. If it reaches that point, the inverted fair value gap will push the price down. Can you imagine this? Okay, and that is the reason I was not expecting the market to go more higher than this. So yes, I took two entries, one with the point 1 micro lot, and then again there is some little bit downward movement, and the market came back from that point. So I again took 5 micro lots. So total of 15 micro lots, and I took my entry out there. Let me tell you why I took my entry before I reached my target. Is because of the reason. No, I think it. I think yes. At this point, I took my target. I'll tell you why I took my target at this point. It is because of the reason I passed my account. I passed the phase 1 of my account. You can see the amount is 6,480, and I have done my 8%. And can you see, in just 4 days, I upload the videos for all the trades I took. In just 4 days, I was able to pass this particular account. Okay. And yes, I took my entry, and this, and one more thing, can you see that? This market, when it rallied higher, it again came back to that point to take out those people who have trailed their stop loss to the break even point. And that is the problem. Do not trail your stop loss to break even too quickly. Okay, because if you see, according to the target, okay, it has like 2 or 3 times it has reached that point. So if you set your target at the break even, it will take you out, and it has happened to me earlier, and that is the reason I didn't want the target to do this. So yes, and then I started to go up, and at this point of time my execution was there. Okay, I took my entries off because obviously I got 6,480. There's no point making more money just because I already passed the account. So there's no point making that money. Got it? So that is the reason I took my account. But if I didn't get what I wanted to, I would have taken it out just after seeing some rejections. Okay, there's a rejection I see, and the market came back to that point. So at that point I would have taken out. Like, why should I wait for just for the 10% of my target? Why should I wait for the 90% of time? Can you see that? Just for extra 10%, why should I see? Just for extra 10% of the target, okay, why should I wait for the 90? See, around 60% of the time I could have to wait. Got it? But yes, it rallied high because I was my daily bias was bullish. Got it? These are two trades which I took. Okay, I think these are two trades which I took. One at this point and another at this point. I hope you guys can know, you guys can understand, okay, this trade. And finally I passed my phase 1. I'll upload another video for just showing how did I pass my phase 1 account. Okay, see, I was learning for 6 to 7 months, and in just, I'll say, 4 days I passed the account. $480 in 4 days. Not even $480, I think it's 500 or something account which I passed. Okay, and that is it for the day, guys. Take care. See ya. Bye bye. Have a nice day. Have a good luck in your trading. Bye bye. Keep learning.